It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, welcome back to the Real Estate Breakfast, heard right across Australia, bringing you the latest from the property market, from Dubbo to Canberra, plus the regional markets. Yes, we can't forget those regional markets. And remember, we're not talking about property listings. There is no sales talk here, no pictures, no fluff, just the property insights that you want. And good morning wherever you might be listening to us from, whether that is here at home or overseas with our growing audience of expats. They are keeping at the moment an eye on the Australian property market and thinking about whether their next move is back to Australia, especially what is happening in the Middle East. And hey, May is starting to call us. It is Thursday, April the 30th. If you're a fan of country music, I see today Willie Nelson, 93 years of age. Good on you, Willie. You might remember that song a few years back, 25 years ago. Him and Julio Iglesias had that song, To All the Girls I've Loved Before. And I'm not sure, Willie, whether you'd get away with that song in 2026. Coming up in just a moment, we've got another regional market comparison, and it is Orange versus Wagga Wagga in New South Wales. Now, mortgage competition, that is heating up. Several lenders are adjusting their rates for refinances, which we talked about on Tuesday. The lenders, as a result, are increasing pressure across the lending market, and you can expect more movement, is my guess, subject to what happens next Tuesday with the RBA announcement. Right, let's right now go to Queensland. We are going to Bly, great little spot, to catch up with Ian Ugarte, the founder of Invida. And welcome, Ian, to the Real Estate Breakfast this morning. Now, you focus on affordable housing models, rooming accommodation, and alternative property strategies designed to improve yields while increasing housing supply. I mean, that's all pretty big stuff at the moment.
Yeah, absolutely. There's so much demand going on for affordable housing, and that's what we do, and that's the hole that we've put ourselves into.
Yeah, not a bad sort of place to position yourself. Now, right across Australia, rental pressures and affordability challenges. We know that they are pushing more people towards flexible and lower cost accommodation options. Investors are also searching for stronger cash flow models. What demand trends then are you seeing right now, and where is it heading to next?
Yeah, look, I mean, it's not a trend that's only just appeared. You know, I've been watching census data from the early 2000s, and we've got a mismatch in the property market cycle right now. And that mismatch is that 80% of all new construction is basically 4-bedroom houses. And at the same time, 80% of all new households that are entering in the market ready to rent a property are single or couple households. So in Australia, the trend is that we're building larger homes with more bedrooms for the people that need it the least. The 80% of the market that wants to rent a property is actually a single or couple. And so while we're building these large family homes, we've got these family sizes getting smaller and smaller. So the demand right now is the mismatch, and we all know mismatches, Airbnb and Amazon and Netflix. Someone needs to fix that marketplace, and that's the trend that's happening now, and you can fill that market really quickly.
Yeah, because I've seen these videos, and maybe it was one of your projects, in fact, where somebody's converted a house, and it might be a 4-bedroom, might be a 5-bedroom property, and they've set them up as completely separate. Like they've got the little kitchenette in there. There's no stove, oven, etc. But I think you can make yourself a cup of tea. You know, if you're going to eat, probably you're going to order food that you can put in your little refrigerator. And then maybe there is also a sort of a general area where people can share a larger kitchen. Is that the sort of thing you're talking about?
Yeah, absolutely. And it probably was our conversion. We did a 48-hour conversion, so 12-hour days, 4 days, and we converted a 3-bedroom, 2-bathroom, multiple living area property that was about 50 years old into 6-bedroom, 6-bathroom, 6-kitchenette, 2 main kitchen properties, and fully furnished it in the 48 hours. And each person has their own sitting area, their own courtyard, their own bathroom, kitchenette, and they get to share the common kitchen and laundry, but they don't really go to the common kitchen because they've got an induction stove, a microwave.
Yeah, so alternative housing models, which is exactly what you're talking about, can sometimes also improve the returns when structured correctly. So from your experience, what is separating at the moment a sustainable high yield strategy from one that simply looks good on paper? And I think there's a lot of those that look good on paper, but they don't necessarily translate that way.
Yeah, absolutely. And so the beauty with what happened with me was I was a big block developer and I just had a really sad time in my life and I needed something different. I went looking for something that was going to provide and continue to be able to build a property portfolio, but that was actually going to help the community at the same time. And I went for cash flow strategies, and everything I looked at was either regional or was high risk or it was mining, and I didn't want to do that. So I wanted growth and I wanted cash flow, but they've always said you can't do growth and cash flow in the same deal. And here I found unknown, unused policies across the country, which could make a very big difference. And so I started buying capital, good growth properties in good metropolitan areas. And I was able to sustain cash flow by providing more. And it's sort of like playing Monopoly, right? You want to buy on the best street on the Monopoly board, and you want to buy a hotel equivalent, which has multiple rent strategies. And then that way you're actually getting the best of both worlds.
Yeah, the other thing too with this is it's kind of like the perfect storm, because people, whether you like it or not, people are actually getting transitioned into this. So if you go back before COVID, yeah, people were actually doing what you're talking about, but just not as much. They weren't in the zone of maybe convincing people as much as they are today. You know, the tiny space has become such a factor of acceptance from the marketplace. Is that a fair comment?
Yeah, absolutely. Getting smaller housing is making a difference in a multiple of different ways. For an investor, we're actually doing much better for the community because we're providing more front doors very quickly and putting them on the market very quickly. But for the people that are living in the property, they're saving themselves 1/2 to 1/3 off their normal weekly rent, and utilities are included. So at the moment, as an example, one of our properties as a whole property would rent for $650 a week, but people are willing to pay $300 to $350 a week for a smaller space in that house, because $300 a week is a lot for a lot of people. And so then they get the benefit of community. And we're fixing a housing problem. We're really fixing and putting more housing onto the market. And that means that the government wins out of that too, because the government can concentrate on low socio while we fix the middle class rental problem.
We are talking to Ian. He is in Queensland in Bly. When we come back, we're going to talk about regulation and council challenges and also the future of residential investing. We're back after this.
It's the Real Estate Podcast, talking properties from 6 a.m. every day from every corner of the Australian real estate market.
All right, let's have a look at this regional market comparison. And we've got Orange going up against Wagga Wagga this morning, 2 strong residential centres in New South Wales with a similar population scale, diversified economies and consistent buyer demand. In Orange, first we go. The median house price is $731,000. You compare that against Wagga Wagga. Their median house price is $790K. Median unit price in Orange, $502,000 at the moment. You will buy cheaper in Wagga Wagga. Their median unit price, $462,000. So that's a bit of an interesting look there between Orange and Wagga Wagga. The units in Orange definitely showing solid annual growth, suggesting affordability demand remains active. And in Wagga Wagga, you've got the defence spending, the infrastructure upgrades, and a diverse local economy. Well, it is a Real Estate Thursday morning. Ian is with me. We're talking something I think a lot of people can relate to. Let's move on to regulations and council challenges, because one issue investors often raise is that innovative housing models can face planning, compliance and council hurdles depending on location. So what are the biggest mistakes, Ian, people make when entering the space that you are in, and how can they avoid them?
Yeah, look, I think when it comes to the term co-living, people just think that that's a share house and that I just go out and buy a property and put people in the property and everything, and then I'll just get more cash flow. But the term co-living is actually a marketing term that I put into the industry because I started doing this 17 years ago. And it was just a way for me to be able to say, you can use this property in a certain way without me having to say it's a boarding house or a rooming house, because that sort of turned off investors 17 years ago. So what I then decided to do was go, okay, well, maybe I'll create something to show people how to do this legally and with compliance, because there's so much rule and regulation around it. There are unknown, unused policies across the country that allow you to get this approval for the use of this property with multiple people under the same roof by going to a private certifier or building surveyor without having to go to council. Essentially, you've got someone with their private business that's approving on behalf of council these processes, and that can take 2 to 10 days, and if you've got all the documentation required to put towards them. The outcome of that means that you can get a really quick turnaround of producing more housing. The other thing that you should be really wary of, and those that are listening, are that there's this false 3-bedroom fly under the radar model, that if you've got 3 people or less in a property that you don't need to get approval. And that's not quite correct, because you do need planning approval. You may not need approval for registration of the actual working of the day-to-day of the property, but certainly you will need it for the planning component. So people can get themselves caught by thinking they can just put people in a house and get extra cash flow. There is compliance, there is requirements, there are processes that speed it up, and it's something that, that can be done very quickly.
You're explaining all of that takes me back 15 years ago, because I bought an investment property. It was a 1950s house. And what they had done was they had divided the house into 2 two-bedroom units, but without that compliance wall. And I bought it, and I knew that it wasn't compliant. And I just sort of left it for a couple of years, and I kept meaning to get onto it. I eventually sold the property, and then it became somebody else's issue.
That 48-hour challenge that we talked about before was exactly what you just talked about. We, this year, came up with a model that we call the adaptable home. And so what we do is we use a rooming house. So the rule that I go by is you can't use a normal house for co-living, but you can use a co-living as a normal house. So we got the approval for rooming accommodation. We put 2 kitchens in, and we put 6 single rooms around it. But that property can now be used as 6 separate rooms, can be used as a 2-bedroom and a 4-bedroom, can be used as 2 two-bedders with 2 singles. And adaptability means that that property that you bought way back then, if it had this approval on it, would be totally compliant and legal for family, but totally legal and compliant for single people or couples as well. So I think compliance is a really big thing that I've heard it for many years. Just convert the garage, it's all good, no one will know. You've got a very high capital investment, and whilst you might be paying for insurance, you're not insured if you've got an illegal, non-compliant building.
Yeah, I think my story just resonated with a whole lot of investors around the country who said, oh yeah, me too, I did that as well. Look, we'll wrap it up there, Ian. That is some great information that you have shared with us on this Thursday morning. Thanks for jumping on to the Real Estate Breakfast, and enjoy the rest of your week.
Thanks for having me.
We connect you to the best real estate information across Australia. The Real Estate Podcast.